Home sales have broken all records highs in 2020 and 2021. But guess what? Economists are pretty confident that things are about to flip upside down. So, what's really happening, guys? Hey, the housing market has been absolutely crazy for the past 2 years because people suddenly stopped buying houses when the pandemic first hit in 2020. They were scared because of the health crisis. Nobody knew how to deal with it. So the sale and purchase of houses altogether stopped. Soon, this caused interest rates to be slashed to near zero. And that's when all the fun began. People started waking up thinking that, whoa, this is an incredible opportunity for me to buy a new home. Now, the people started buying homes and the housing market began to surge. People living in big cities like New York and San Francisco began thinking, you know what? Why am I paying these hefty amounts for my rent in this big city while working from home? I can easily just move on down to Texas and buy a home in the suburbs near Budget Bill and that has a yard and has an in-house office and I can pay less on my mortgage than my rent. This thought process generated a new wave of buyers who were moving to the suburbs from the big cities and were buying new homes. That's when mortgage rates started to bottom and the housing market rose even higher. People didn't want to miss this housing rush, so they started buying homes. That's when lumber prices soared to nearly all-time highs. That's when people started stockpiling lumber and it became much more expensive for home developers to build a home. Since people were afraid of getting sick, hiring labor also became expensive as well. This is another factor that contributed to the surge in housing prices. And on top of that, new government regulations stopped landlords and mortgage companies from evicting people out of their homes if they are short on their mortgage payments, which is known as the eviction moratorium, which was recently extended through July 30th of 2021. So now that we have these high costs in building homes, we have high prices of lumber and a limited supply of new homes and a surging demand to build new homes. All of these things cause the housing prices to increase dramatically. But now economists are worried about what's coming soon in the housing market because, according to reports, the housing market is about to flip upside down. But before we go any further, guys, hey, if this is your first time to the channel, hey, welcome and glad to have you. We would appreciate it if you can go ahead and subscribe to the channel. It's totally free. And if you could, go ahead and hit the like button for us. It really helps out the channel. Now, let's go ahead and finish up this video, guys. What is about to happen? According to Mark Zindi, the chief economist of Moody Analytics, the housing market is about to cool off. So let's discuss the reasons as to why. The first one is the overhauled housing markets. We can't deny that the stress fractures are beginning to show in the housing market. Home prices have surged so fast, so far, that they have gone into crazy territories. All around the country, home prices have seemed to increase by about 10 to 15%. This is when we compare price to rent ratios or price to income ratios with their long-run historical averages, according to Mark Zindi. Some markets, primarily based in the West or the South regions, are significantly overhauled by 20% or more. And if we look at the recent home sales of homes in suburbs, we are seeing people paying anywhere between $30,000 to $100,000 above the asking price. But why is that all important, and how can it help the current home prices? Well, overhauled housing markets are often subjected to meaningful price corrections as mortgage rates eventually go up. And they certainly will, as the economics suggests. The Federal Reserve is of the view that the economy will return back to some form of normalcy, therefore will cause interest rates to then stabilize. The cessation of the work from home setup and government regulations. Now, this work from home anywhere thing has also contributed to the soaring home prices. Just as we have mentioned above, most people have moved from their rental apartments to new homes during the pandemic. This created a lot of housing demand. Now that the pandemic is easing up and the vaccines are here and actually been very effective, I must say, there is a new fundamental change rolling our way regarding our working and our living standards. The change is inevitable since companies would want their employees back into the office again. Moreover, these newfound government regulations that were implied during the pandemic, such as foreclosure moratorium, government-backed mortgages, and student loan forbearance, are all about to expire in the coming weeks. Now, according to this news article published on July the 7th, local officials and state distributed about $1.5 billion in rent assistance in the month of June. The Treasury Department reported that these statistics on Wednesday, dragging the overall rental aid distribution over the first 6 months of 2021 close to $3 billion. After the cessation of these governmental regulations, we can expect a drop in housing prices. Now, another reason is the lower housing demand. Overhauling and cessation of supporting government regulations will weaken the housing demand. Housing prices will soon begin to adjust. Now, we don't expect broad-based house price declines, but these factors sure are a minor threat to the housing market that will create weaker sales and considerably increase in mortgage defaults, which is unlikely due to the strict underwriting standards and the improvement in the job market since the financial crisis. Now, unlike the giant housing bubble we saw before the financial crisis, market flips termed as arm-length sales within 1 year of the preceding sale remain pretty low. So conclusively, the housing market isn't a bubble, guys, and much of the flipping that has been going on over the past few years, and from investors purchasing and selling older homes, especially in the Midwestern and Northeast cities, investors renovate these homes and quickly sell them. Now, let's go ahead and look at some of the latest statistics to shed more light on this situation. According to Realtor.com, new listings increased 5.5% year over year in June and 10% compared to in May. That means there is less inventory in the market to choose from, and honestly, a relief for the entire housing market. Another good news for buyers is that pending home sales increased 8% in May compared with April, as indicated by the National Association of Realtors. This has led leading economists to believe that housing prices could cool off a little bit this year. Moreover, the chief economist of the National Realtors Association forecasted that more houses will be listed in the second half of this year, which will cause the rapid home price growth to slow down a bit as well. And then if we look at the mortgage applications, they have skidded to the lowest in over a year. This indicates that first-time home buyers are jammed out of the market due to the shortage of entry-level homes. We know that does not exactly sound like a price drop, but economists believe that the flattening in mortgage demand will cause the sales to hit bottom. So, we have discussed how economists are certain that home prices are about to cool off. We discussed that their opinions and their latest statistics that we have. We also discussed how the lumber prices have come down from about 40% over the past month. And with all of that information, we can surely see how the housing market is about to slow down. But if the demand continues to stay the same, we could end up seeing these inflated home prices continue through the remaining of this year. But on the flip side, with the eviction moratorium about to expire in July, that could cause people to panic a bit if we start to seeing an influx of foreclosures on the market, which would then increase the amount of inventory available for purchase, which would in turn cause the demand for homes to decrease. Hopefully this video helped you guys understand the future of the housing market and the changes that we can expect in the coming months. And with that being said, if you enjoyed any of this information or found it to be useful, hey, go ahead and hit the like button for us. It definitely helps out a lot, and it also tells YouTube to share this video with others. And if you haven't already, hit the subscribe button for me so that you can be a part of this community, and hit the notification bell to be notified of each new video. And if you want an opportunity to get 2 free stocks worth up to $2,000, you want to go ahead and sign up for Webull account. They have actually recently lowered the deposit requirement from $100 to now $5. This is a great way to start investing for free and a great way to get something free in return. Other than that, guys, hey, I appreciate you guys stopping by and watching, and I hope to see you on the next video. Peace.